Welcome to Mex Moves, our weekly podcast on Mexico business and finance for a global audience. How are you, Eduardo?
I'm doing very well, Damien. How are you?
Good. Before we get going, just wanted to ask the audience that likes our podcast to write a comment or give us a 5-star rating if they think it's merited, as that helps spread the word and build our audience and so on. So this week we have an interview with Siegfried Esentia, Director of Public Affairs at Didi, on the company's really quite remarkable expansion in Mexico over the last 5 years. And before that, we have a brief chat with White Paper's Daniela Dib, who goes in a little bit of the history of Didi, both in Mexico and in China. And before we get into the interviews, Eduardo, I thought we'd talk about Klar, the fintech, buying or agreeing to buy Bineo, Banorte's failed fintech, the Esentia IPO, planned IPO, then tariffs and the budget for next year, and Amazon buying a convertible in Rappi and having the right to buy up to 12% of the company with warrants if Rappi meets certain performance targets.
That's right, Damien. If you don't mind, let me start with a little bit of the budget and the tariffs that were recently announced. Let me start with the budget. The budget was handed to Congress on Monday, and obviously this is a preliminary budget that will have to be discussed and debated and maybe amended in some cases, but it gives us a broad sense of how the government is viewing next year and what are its priorities in terms of spending and so on and so forth. Really, the biggest surprise, if I may say so, was the announcement of these tariffs, which we will talk about them later on. Products coming from countries with which Mexico does not have a free trade agreement that we've mentioned before, or we did last week, aligns Mexico in a how could I put it, ahead of even the negotiations with the U.S. on free trade, aligns Mexico to the U.S. trade policy that is following in putting tariffs on some countries that feels that they take advantage of the U.S. However, that strangely might sound, and Mexico is following in general terms with that policy. I don't know if it was a good move to do it before negotiating the free trade agreement. Maybe they could have done it as a card for those negotiations that will happen in the next few months or next year. But they've already announced them. But in any case, before that, in an overall sense, the government is expecting a growth rate of between 1.8 and 2.8% for next year, a 2.3% increase, which will likely be higher than this year's growth rate, which analysts estimate will be around 0.5, 0.6%. The growth rate for next year is much higher than what private economists, the IMF, the poll from Banco de Mexico establishes, which is almost 1 percentage point lower, 1.4%, while the World Bank and the OECD have an estimate of 1.1% for Mexico's growth rate in 2026. The government is optimistic that it will increase its revenue by 5.9%, and that will represent about 22.5% of GDP. Out of the total amount of money that the government will be getting, more than half, 57.3%, will be from fiscal tributes or all the taxes that the government has, including the new taxes that it will be imposing on products from countries that don't have a free trade agreement with Mexico, and including what we talked last week about higher taxes for sugary drinks, tobacco, violent video games. They will be defining those next week, I guess, and casinos. So those industries will be impacted by this increase in the taxes that currently paid when they produce and sell their goods. The rest of the income will come from debt. 14.4% will be from issuing debt. And the rest from oil and other public entities, and that's about 28.3%. So the government expenditures will also grow to 5.9%. And the fiscal deficit, or the government's financial requirements, will be 4.1%. Not as low as people had anticipated. And mainly that figure comes out of the fact that this year the government will not be able to reduce its deficit to 3.9% as it had been estimated at the end of last year, but they will end up with a 4.3% deficit, which is lower than the deficit that López Obrador left the economy when his government came to an end last year, I think around 5.2% of GDP. Oil production will rise allegedly 4.7% to 1.7 million barrels a day from an estimate of 1.71 this year. And in terms of spending, health and education do not get a lot of money. Sadly, from my point of view, they will only get 2.6% of GDP and 2.9% of GDP, way below what is recommended, way below what the education and the health law indicates that Mexico should be spending on those two sectors. At the same time, social programs will get much more money, 14.1% more than last year. So financial costs will represent 12% of total expenditures, or 1.1% of GDP. So that's an overall view of what the government is planning for next year. There is a lot of investment going on to trains. The Tren Maya gets 30 billion pesos, I guess, because of its change to become, or addition to become, a cargo train. I don't know how good that money is going to be spent in a project that is losing money and is not likely to make any money anytime soon. But other train projects like the one to Querétaro, Haifa, Pachuca, Saltillo, Monterrey, and other passenger trains will be developed and will be getting some funding from the government. Damien, I'll leave it at that, not to bore the public with too many details. I don't know, what was your overall sense of the budget in general terms?
Look, I think from a big picture perspective, private sector, international markets, local markets can be sort of relieved that deficit, remains, roughly 4% of GDP, just a touch above. That's consistent if they meet their growth goals, broadly speaking, with a government debt to GDP ratio that's stable. And that's what the rating agencies want to look at. So I think, for a lot of people, that's what, especially in a world where, fiscal deficits are so high, especially in Europe and the US, Mexico, remains relatively under leveraged from a public and private sector perspective. And this deficit will ensure that continues. So I'm sure this deficit is consistent with Mexico maintaining its current ratings, short of any unexpected calamities on the horizon. Second, they're making the sums add up, not through a tax reform, which I don't think anyone thought was on the cards, but basically through these sin taxes that you mentioned on soft drinks, cigarettes, violent video games, and also on these new tariffs, which, rather like the US, have now become sort of part of the sort of fiscal accounts. Potentially 10 to 50% tariffs on mostly Asian countries that Mexico doesn't have free trade agreements. And from a materiality perspective, that's mainly China. So Mexico, about 20% of Mexico's imports come from China, I think. And they'll be the ones that will bear the brunt of this measure that's going to raise apparently another $3.8 billion. And then Ebrard, in a sort of, as I understand it, slightly separately to the tariff announcement of the 10 to 15% on thousands of items Mexico imports are not covered by free trade agreements, talked about tariffs on Chinese cars of 20 to 50%, and that's going to have quite serious repercussions. in Mexico, because Chinese cars are maybe 20% of the market. There's been hundreds of dealerships set up to sell Chinese cars. They give consumers a good deal, and all of those are going to be if this goes through, and if there isn't some kind of a change or renegotiation, all of these are going to be pretty badly affected, because I've read that the Chinese SUVs and so on are about 25% cheaper than from the equivalent sort of European or US car at the same quality. But if you put these kind of tariffs on, then they lose their competitive edge, or maybe even become more expensive. So the whole ecosystem built around the Chinese cars could be undermined by this. And clearly, these Chinese goods have helped keep inflation down in Mexico, and helped and lead to an easing of cost of living pressures from parts of the Mexican population that buys a lot of Chinese imported goods, including meat. So all these prices are going to go up, and that's going to be an issue as those prices are passed on to consumers. Now, why they're doing it? To raise the money, but I think in addition, and perhaps most importantly, as we talked about last week a bit, Eduardo, this is part of a kind of informal, non-spoken sort of semi-customs union with the US, right? Which is,
Right.
You put a lot of tariffs on China, we do the same, and that will help the free trade agreement negotiations go well. And I think there's a view that the US is very focused on its huge deficit with Mexico. Mexico roughly has a trade balance, so the deficit, that its surplus with the US is mirrored by its deficit with China. If you can cut the deficit, Mexico's deficit with China, then somehow the Mexico's surplus with the US will go down. There may be some, not much, substitution, buying from the US instead of from China, but perhaps a lot of Mexico's surplus with the US was basically refabricating or just re-exporting Chinese and Asian goods. So that will be hurt by this. So Mexico will be able to show to the US that its surplus with the US is going down, even if really what's happening is it's just re-exporting less Chinese goods to the US. So it's a sort of form of cracking down on that kind of quasi loophole that was in place. So I think it helps meet that objective, and then it also meets the objective of Mexican companies who were competing in some form or another with the Chinese, whether it's in auto parts, or whether it's in textiles, or whether it's in steel and so on. So they'll all be relieved by these, or cars for that matter. Perhaps most importantly, they'll all be relieved, whether it's Mexican-owned companies or whether it's Mexican-based companies owned by US manufacturers or European manufacturers. So all of them will be quite happy with this. The losers will be the Mexican consumer, and probably the Mexican consumer in the sort of middle and lower income segments that spend a higher proportion of their total income on Chinese goods. And that'll also be the ones affected by as a proportion of their total income, by the sin taxes, because they spend a bigger amount of their income on Coca-Cola or on cigarettes and so on, because mainly because their income is lower, but also because they consume a lot of these goods. So there's quite a lot of regressive taxes if you add all of this up, which will affect cost of living. But there's a commercial logic to it. There's a strategic logic to it with respect to the USMCA negotiations, and there's now a fiscal revenue logic to it, and that's why they're going ahead with all of this. But it will have quite significant repercussions through the Mexican economy.
Yeah, I mean, I would agree with what you say. I just have two additional elements to add, or two concerns that I think. On the one hand, I don't like Mexico imitating what the U.S. does in terms of trade. I think Mexico could have put some tariffs on some goods if they had been brought into this country with subsidies, or if they had studied what the products were, how they were being produced. In other words, to follow the rules of trade that the OMC had, not just by imitating what the US has done. I understand the logic. However, my other point is that I think Mexico could have used these potential tariffs as a bargaining chip when they sit down and negotiate free trade with the US, rather than give it up even before the trade negotiations begin. Or maybe, I don't know, maybe they've already agreed to get something in return out of this. But from a strategic point of view, I think, and I heard Kenneth Smith just a few hours ago mention this, that maybe as a negotiating tool, they could have done much more with it before sitting down with the US. And another country that worries Mexico, should worry Mexico, is South Korea. We do have trade with South Korea, probably not as much, but the South Koreans have invested quite a lot in Mexico, and this will probably alienate a little bit the South Korean government and its huge, large companies. We'll have to wait and see how it all turns out to be. But so, yeah, I agree. I mean, in the circumstances, it makes sense, yet maybe it could have done a slightly different to avoid caving in too quickly, too fast, and to dismiss trading rules from my free trade point of view.
Yeah, and it's definitely bad for Mexico's transition to cleaner energy, right? Because the Chinese are major leaders in electric vehicles, and they're very much cheaper than the US, the Tesla equivalents or the European equivalents, and not having access to that, if this happens, will slow down that transition. I mean, if you go to Shanghai, you can barely hear cars because most of them are electric. So it's a much quieter city than somewhere like Mexico City. And people like me, like a lot of foreigners in Mexico City, sometimes stress about how noisy the city is. Looking forward to a day of millions of electric vehicles, that's probably going to slow down. Now, maybe the hope is that the Chinese will move production facilities to Mexico, and we'll be producing lots of Chinese cars ourselves. Let's see. But that's the road that we're going down, and whether we like it or not. So maybe we could shift, Eduardo, to Banorte selling Bineo to Klar. Did you see that?
Yeah, interesting transaction, I gotta say. I mean, like you said at the beginning, it does indicate that Bineo didn't pan out to be what Banorte had expected. At the same time, we've spoken about this before, in the sense that banks have digitalized themselves within their own structures without having to have a fintech in their structure. And then this fintech Klar comes up and grabs Bineo. What can you make? What can you tell us about it from your perspective, Damien?
Yeah, I mean, I think Banorte and its shareholders will be, very pleased that Banorte is offloading Bineo. They probably don't have official numbers, but they've probably invested $150 million plus, on top of that, some additional losses. So they'd be keen to get rid of Bineo, which clearly didn't work out, and so finding a buyer will be is good news for them. I think from Klar's perspective, there's been kind of two routes that fintechs in Mexico have gone with respect to getting a bank license. Nu has gone, and Platacard, among some others, have gone and Revolut have gone the greenfield route, setting up a license from scratch, building their own IT, getting their own regulatory approvals. And then you've seen some others, Capital Bank, which we talked about last week, Covalto, which is mainly an SME lending fintech, and Voila, which is a credit card fintech, which bought ABC Bank, have gone the route of buying stuff. And Klar has gone the route of buying something, but unlike Voila or Capital of Covalto, they're buying basically a clean bank. Banorte, Bineo never got off the ground. It had almost no credit. So it's could be the best of both worlds. You get the IT, the governance, and the people, or some of the people at least, and at the same time you don't sort of inherit a challenging kind of legacy assets that might not be performing as well as you would have liked. So it looks like a good move. It really depends on what they paid, and we don't know that. But in theory, at least, it looks like a good move. Now the big question is, how long will it take the CNBV, the regulator, to approve the change of control? And because some of the banks, the financial entities like Nu and Plata have argued that there's really no point buying a bank because it takes as long to get approval for a greenfield license as it does to get approval for a change of control. So you may as well do it yourself and save the money and the integration issues. So my guess is that Banorte and Klar will be putting as much pressure as they can do in a prudent fashion to get this change of control approved. It's in everyone's interest for that to happen in an expeditious way. If it takes 2 years, then they didn't really save any time, because that's how long it's sort of taken some of the greenfield banks to get their license. If it takes them a year or less, then clearly it was a time saver. So that and then there's a second part to getting your bank license, which is the sort of operating approval, and that often that's sort of underestimated, but it can also take a very long time. So, for example, Revolut announced with some fanfare over a year and a half ago, almost a year and a half ago now, that they had their bank license in Mexico, and as far as I can tell, they're still not operating in Mexico. So it's taken them at least that time period to get their operating approvals. And Nu obviously has also announced it's got a bank, but it still isn't operating as a bank. It is a SOFIPO. So from a customer point of view, there isn't a big amount of difference. But anyway, it's going to be interesting because you now have Nu and Plata with announced bank licenses. You've got Klar now with the announced acquisition of Bineo. You've got Mercado Pago, which is sort of the biggest, even if it's not even a SOFIPO. It's an IFPE, but it's the clearly the sort of the major potential player, based on the size of its existing credit portfolio and its overall presence in Mexico. So you've got a lot of different players, and then you've got Story, which is a SOFIPO, which is more focused on the less well-off segments of the population. So you've got a lot of competition in the fintech space, and then you've got all the incumbent banks, as you mentioned, Eduardo, digitalizing very successfully in some cases, finally getting a lot of competition, which is great. Meanwhile, in the budget, the government also went after the banks by reducing the ability to deduct their EPAP, their deposit insurance fees from their taxable profits. That's going to raise another 10 billion pesos, or $500 million or so. So that's all these fintechs are becoming banks, but actually being a bank is going to be a little bit more expensive post this budget with that small change.
I think you're right. Bineo, it's a small operation for the size of Banorte. So basically, Klar is buying a banking license to accelerate its process of giving full services to its clients. So we don't know how much paid, so we don't know how it impacts Klar's finances as well, or how much could the Banorte recover from the 100 million that they might have invested in the company. But it made sense for both, obviously.
Yeah. Now, Klar has, based on the reported numbers, because as a SOFIPO, it's a regulated entity, has done a good job at growing its portfolio. It's also increased its deposits very significantly by offering attractive yields, far more than the incumbent banks. But it still is posting significant write-offs of its credit portfolio. So if you adjust its net interest margin by write-offs, it's still not making any meaningful money and losing money on a net basis once you factor in other costs below that line. But they've built up a good operation. They're very leanly managed. It's definitely growing its credit portfolio quite significantly on a year-on-year basis. But like all the fintechs, whether it's Nu or whether it's Story or whether it's they still need to improve their credit quality to be able to make decent money on a net basis. But having a bank will I'm sure enable them to offer more products. The CEO of Klar talked about payroll lending, which is the sort of jewel in the crown of the incumbent banks. Having a bank builds confidence, probably enable them to reduce the yields they offer on deposits. So it puts them in a position to be profitable going forward, even if, like all the other fintechs, it's still in the red.
Correct. Shall we move to the other topic we mentioned that you mentioned at the beginning about Amazon buying a stake in Rappi, the Colombian food delivery company? That was, I think, maybe not so surprising, but an interesting development in that area. Bloomberg was the one who broke the story, if I'm correctly. We don't know exactly they said a 12% stake, but they have a warrant. They have a warrant to have a 12% stake in the company. The initial investment apparently was for 25 million with a convertible note. But it's interesting. As Amazon, we've said before, is facing tough competition here in Mexico from Mercado Libre and all its capacity to deliver goods and services in the terms of financial services with its financial arm, Mercado Pago. So now Amazon seems to be rapidly trying to catch up with them with this strategic partnership with the Colombian firm, which has grown at a rapid pace in Mexico, and they are linking up. I think for them, the transaction makes sense for both of them. They can combine their operations and learn from each other and service the Mexican market much better, the Mexican market and other markets, because Rapid is also in Chile and Colombia and other places in Latin America. You had interesting thoughts about this before we started the podcast, Damien. Why don't you give us your interpretation about this new transaction in the technology world as well?
Well, first of all, I don't have any more information than you have, and that was reported in Bloomberg. This wouldn't be the first investment that Amazon's made in food delivery. So I think back in 2019 they took a 16% stake in Deliveroo in the UK. Deliveroo is also a client of AWS, the Amazon's cloud division. They also took a small stake in Grubhub back in 2022 with warrants to raise their stake. And then in Brazil, 2022 also, I think they took a 10% stake in Total Express, which is a logistics provider there. They have a track record of sort of experimenting with pretty small sort of option-like investments. Traditionally, and I think this will be the case here as well, they don't merge it in any way with their core sort of e-commerce activities. So they'll stay separate, I would imagine. Although you never know in the future what they might do. But Amazon was briefly they had Amazon restaurants. I don't know if you remember that back in, and they closed that down. So there was a period when they were interested in this segment, but they're now doing it through these minority investments. And clearly, Uber Eats, Didi, and Rappi are the ones that are going to fight out the market. I think secondly, Rappi's valuation, which at one point got up to 5 billion or so, according to the public findings of some of the original equity investors, has come down a lot. And they've been talking about doing an IPO for a while, which hasn't happened, obviously. So I think this probably reflects that that Rappi needs the money, and that it's like a lot of these last mile companies, it's quite labor intensive and quite expensive. And the latest labor law reforms in Mexico forcing these gig economy workers to be, for the most part, to be registered with the IMSS, and raising the cost of hiring them and formalizing their employment in some form or another. It's probably going to put sort of additional margin pressure on them. I also, as Sherlock Holmes might have said, I think it's also interesting what hasn't happened, which is, you could have expected, you might have expected Mercado Libre, to buy all of Rappi, right? It would be given the size of Mercado Libre would be quite a logical kind of acquisition. It would be quite sort of synergistic. It would give another product to Mercado Libre, and they obviously have decided that, I'm sure that they have that option. The shareholders of Rappi, many of them at least, would be keen to exit. They've been there for a while now, and they, as far as we know, they haven't taken that opportunity. They either don't like that last mile space, or one day they want to do it alone, or they think they'll get a better price later down the road. But it's interesting that Mercado Libre didn't go there, and is letting kind of Rappi continue as it is. Rappi also, as we've talked about before, sold its stake in its joint venture with Banorte with the Rappi card, and they got some money for that as well. And they're also, will continue to get fees for customers that sign up to the credit card through the Rappi platform. I'm sure they'll also get fees related to the brand, Rappi, that's still being used and will still be used for the card, which is sort of the young person, sort of hip person credit card that, for Banorte. I think that's where we are. I think it might also suggest, although this is a bit speculative, that that Amazon has fallen a bit behind Mercado Libre in Latin America, in Mexico, definitely in South America, of course, but even in Mexico, even though they sort of started at roughly the same time here, and maybe this is a sort of sign by two weaker players in Mexico, namely Amazon, almost certainly has a lower market share than Mercado Libre at this point, and Rappi, which has had its issues, as I mentioned, are sort of two weaker players kind of getting together to fight off the more dominant player. Is a somewhat speculative analysis of the situation.
Yeah, I mean, one thing that it's also interesting, Damien, is the backers of Rapid are big investor names like SoftBank Group, Sequoia, T. Rowe Price, and last month Bloomberg even reported that they got money from Banco Santander and Kirko's World Capital Partners. So, I mean, in terms of names, the company is very well backed up, and now they have Amazon as their latest partner. So I think for Mercado Libre, this could also be a sign that they'll be facing greater competition, or that the competition in front is beefing up and trying to see if they can come back and take market share from there, or at least don't fall behind them as much as they have over the past few years.
Yeah, but I wouldn't want to overstate it, because I think they'll be run as separate, very separate entities. So I don't think there'll be too much going on between them. And of course, Rappi, Amazon has given sort of Rappi, the equivalent of Rappi, Amazon Prime to Rappi users. So there already was some kind of commercial agreements between the two players.
So they know each other.
Yeah, so there's basically a partnership with Amazon. Rappi Pro and Prime is already in place between the two. But we'll see where that goes. Moving on, Eduardo, there's an interesting IPO. We don't get a lot of those in Mexico, which is filed. It still has to happen, of course. Esentia Energy. So Esentia Energy basically is the new name of what was the old Fermaca natural gas platform. It's a sort of vertically integrated natural gas platform, sort of importing gas, transportation, storage, compression, and commercialization. It's got 2,000 kilometers among its different assets of interconnected pipelines transporting gas from Oaxaca, Texas, into Mexico's central and western industrial hubs, including Guadalajara. According to the prospectus, I think it transports about 15% of Mexico's daily gas demand. And its revenues last year, it had $370 million of revenues, $310 million of adjusted EBITDA. As the nature of these capital-intensive companies, very, very high EBITDA margins. And they're owned so the Famaca group, basically, which originally was set up by the Calvillo family, they sold big stake to Partners Group. I think Partners Group now owns about 84% of it, and then the Abu Dhabi Sovereign Wealth Fund has Mubadala has the other sort of 16% of it. So apparently it's going to be both primary and secondary. So presumably Partners Group, which is Swiss private equity, will take some money off the table, and maybe the private equity fund, the Abu Dhabi Sovereign Wealth Fund, will do the same, and then there'll be a big primary element to continue to fund their expansion, to pay general sort of corporate expenses and so on. So it's the issue of Mexico's natural gas. We've also talked about its importation from the US. It's a big business. I see it as something very very positive for both sides. Mexico gets cheap Texan gas, which is basically indispensable to its industrial sector, and also indispensable to the CFE, because without that, CFE's costs would be a lot higher, and it would either have to sell electricity at a higher price to the end user, which politically would be unpalatable, or it would have to lose, not make as much or lose money. So it's great for Mexico, and it's great for the US, because a lot of this gas wouldn't be easily sold in the US, and it's expensive to liquefy it and export it to Asia or Europe. So everyone wins from this. And Trump's threatened Mexico with pretty much everything at this point, including effectively closing down 2 banks, tariffs of different levels. But he's never really talked about gas, which has come up a lot as a threat, but it doesn't seem to be a very credible threat, because it would be much more damaging to the US than many other threats that the US can conduct if it so wishes. So I think it's an example of something that's actually working quite well between the two countries. It's clearly in the benefit of both countries, and this IPO, if it happens, will sort of leverage off that story. And with energy intensity of GDP going up, because of AI and AI's massive use of electricity, this will be a part of this story. You've seen energy infrastructure companies perform very well in the US, partly because of this. You've obviously data centers have performed really well. We saw this sort of massive pop in Oracle this week on its on unveiling its huge deal with OpenAI on sort of $500 billion of data centers. Well, in order for all these data centers to work, and there's some in Mexico near Querétaro, from Microsoft itself, from AWS, from Geo Networks, you need reasonable cost electricity, and that requires reasonable cost and plentiful natural gas. So I think it'll be a good story to tell, and it's something that, as far as I can tell, is in everyone's interest that it works successfully.
Yes, and I think it's great to hear the new name coming to the Mexican stock market. I know all stock markets around the world are having trouble with IPOs, but in the case of Mexico, it's been for a while. And it also gives investors a chance to play the pipeline gas distribution play. I mean, we used to have Yenova, remember the Mexican subsidiary of Sempra Energy, but I think they dislisted from the stock market. So now we might have, I hope it happens, this new Esentia company coming to the Mexican market. There's also Vista Energy in the energy sector, but that's basically oil, and basically Argentinian oil, and Cox Energy, which is more renewables, solar energy. So this will give broader possibilities for investors that are interested in the natural gas pipeline sector to put their money in it and see how it goes. We still have to wait and see whether it materializes and at what price it comes out and everything else. But I think it's a great news for Mexico, though this came about just a few days ago.
And I don't know if you remember Eduardo, but maybe a couple of months ago, the Calvillo brothers, the original founders of Fermeca, were in the Mañanera, pledging a 3.7 billion investment in Durango, something called Fermeca Digital City, which was a sort of a 2.7 billion hyperscale data center with its own power generation, and then a massive $1 billion fertilizer production plant in Lerdo, Durango. Anyway, that was announced with some fanfare by them, and then not much, as far as I know, not much has happened. So maybe this this IPO will also give some credence to those completely separate plans, and maybe we'll see those actually happen, because quite a lot of those investments in the Mañanera seems to have died down a bit most recently. Somewhat some PR announcements rather than actual announcements. So let's see if something comes of that.
One hopes so. The Mañanera sometimes has propped up investments that were announced even earlier, as if they were new, and the numbers sometimes don't match up. But hopefully this development in Durango takes place for the good of that part of Mexico.
Terrific. So why don't we move on to our interviews with regards to Didi, first with Daniela Dib from White Paper, and then with Siegfried Eisenmeyer from the company itself. So we're chatting today with Daniela Dib. Daniela is a reporter from White Paper. We've had her on the podcast before to discuss her excellent piece on Didi, just to give some context to the interview that we're going to be transmitting later on in this podcast with Didi's public affairs director. Daniela, thank you very much for joining.
Thank you so much, Damian, for having me on the podcast.
So congratulations on your article. What did you discover when you researched the article on Didi that surprised you or maybe contradicted what you expected going in?
We essentially ended up doing a timeline to understand the question that we wanted to answer was, why is Didi interested or so focused in the Mexican market? Since 2 weeks ago, they shared a report that they have 700,000 people working on their platform. So that was quite impressive. And we just tried to better understand their business here in the country. So like I said, we created a timeline of when it was created, when did they launch in Mexico, and we found out that they entered the Mexican market in 2018, which was 2 years after Didi ended up buying Uber's operations in China. They were growing at a similar pace, both Uber and Didi worldwide. And when they entered the Mexican market, it was one of the two markets where Didi decided to expand their overseas business. It was the first two countries where outside of China where they started operating. And after that, the company in China started facing a lot of issues. First, they, I don't know if I'm getting ahead of the questions, but they had their IPO in the New York Stock Exchange in 2021. And then they were forced to be delisted by the Chinese authorities just a couple of months after that. They had to delist in June 2022. And at the same time, their business in Mexico was growing. They started launching their fintech business, their food business, and they didn't seem to be quite as concerned with the way they were operating in Mexico. One would never have known that they were facing so many issues back home in their HQ by seeing the way they were growing in Mexico. So that was the most surprising thing for us.
So Uber is a shareholder in Didi, yet Didi is Uber's main competitor in Mexico. Basically, its only main competitor in Mexico. How do you think Uber has taken to its partner competing with it in what is also a very big market for Uber?
So I think they ended up realizing that they each had found their target audience, their target market. Uber and Didi, yes, they compete in terms of having the food delivery business. They both have the ride-sharing business, but Didi is much cheaper for everyone involved, for the people who pay for their food and their drivers to get to them. And they are targeted to a much price-sensitive public in Mexico, which is massive. And Uber has instead focused on the way that they're operating, they understand that their audience doesn't. Probably they won't. They prefer having or paying a higher price for the trips instead of waiting too much for having them for the drivers arriving, which is the case with Didi. So I think they both understand their spot in the Mexican market, and they are quite agreeable in that sense. They do have an issue with the drivers because most of the drivers and the delivery workers are multi-platform, which means that they work in both all the platforms that are available. So they've had issues with with taking drivers from each other. But I also think that specifically in the Mexican market, they've had to work together in order to face all of the job regulations that have been happening for the past 2.5 years. So yeah, they become from foes, they become friends.
Do you think it's sustainable, this segmentation of the market, with Didi focusing more on economical rides and Uber focusing more on higher segment rides? And do you think that there really is a big service difference? I mean, I've taken Uber and Didi, as you say, is usually the same driver, usually therefore the same car. Seems to me pretty much a commodity. So I would go with the cheaper one. How does Uber justify its higher prices?
They argue that they have a better service, and mostly it's the waiting time. Maybe I call a Didi and it's 30% cheaper than what the Uber ride would have been, but I would have to wait 15 or 20 minutes, especially in smaller cities. Maybe it's not so visible in Mexico City, but in smaller cities where Didi has a larger presence. Something that also surprised us was that Didi's ride sharing or ride hailing service is operating in 70 cities across Mexico, while Uber's exact same service is only in 53. So they have a larger presence inside the country. It's a larger market. And as Uber is focusing on having shorter waiting times and trying to have the best rated drivers and such, I think Didi is also, that's one of the reasons why they are also focusing a lot on their fintech business, because they lend money to the drivers, the delivery workers, the riders, and the restaurants. So I think they understand that they have a much wider opportunity to diversify in their other business, while at the same time understanding the fact that the people interacting in their platform are multi-platform. They work both for Uber or Didi or even Rappi in the food delivery business. So I think it is understandable that they could be facing a sustainable model in the next couple of years.
So Rappi also tried to offer financial services on its own balance sheet under the sort of idea that they would have a super app, like a bit like Didi, and it didn't really work out, and Rappi ended up selling its credit card business to Banorte, though perhaps they made a bit of money from the sale. And now, as I understand it, they're just getting commissions from recommending clients to the Rappi card. Do you think that Didi's going to have any more success?
Honestly, I don't know, because we weren't able to get any information on the financial business. We don't. They say they have granted almost 20 million loans in the years that the business has been operating, but it's not clear if they are, from the credit card business or from the loans to the users or to the drivers. I think they have an advantage that all of their fintech business is built in China, and one of the reasons they want to create a super app is because I think they understand very well the system of having a platform where you can perform payments and send money to your peers, and it's a model that they can just adapt to the Mexican market, and they have much more experience with that than Rappi have. But in terms of the credit card, it's really unclear. I think they are. If you'd ask me, I think they are just like experimenting which part of their fintech business works best. At the same time that they are offering a whole payments ecosystem that Rappi did not have. Rappi just had the card, and you could do some things within its platform, but it was not as ambitious as Didi thinks it is. So I think it's noteworthy that they are the only ride-hailing company that is still offering this sort of really solid financial offering. Uber also experimented with it some years ago. I think they have all tried to focus their business on mobility and delivery. And the interesting thing is that Didi seems to be moving more towards their fintech business. So I think they are betting a lot on it, understanding also that their price sensitive market is probably better aimed for their products than Rappi, which was like more high tier and Uber were.
But 20 million loans is a huge number. I mean, this isn't a pilot program. I mean, Nu has 12 million clients. Most of those are on the deposit side. So I don't think any fintech, even if someone is taking 2 or 3 loans a year, I don't think there's any fintech that has issued 20 million loans. If that number is accurate, it's a very big number.
Yeah, we'd have to see the average amount of that loan and all of the other information that is around them. But yeah, it's not insignificant.
Terrific, Daniela. Well, that was super helpful. Thank you very much for joining us today again. And listeners, if you want to stay on, you're going to get a full interview with Didi Mexico.
Thanks, Damien. Happy to be here.
It's a real pleasure to have with us today Siegfried Esenmeyer. Siegfried is Public Policy Director at Didi, based here in Mexico City. He's responsible for, along with his colleagues, for government relations, regulatory strategy, and stakeholder engagement. And he's helping Didi navigate one of the largest and most important markets for the country, which is Mexico. How are you, Siegfried?
I'm good. Thank you, Damien. It's great to be here. Many thanks for the invitation.
Thank you. So, Siegfried, why don't we kick off with Didi's overall presence in Mexico, both in ride-hailing and delivery, and what makes you different to your competitors in Mexico?
Sure. So I think what we have seen in Mexico is quite an impressive growth trajectory of the company. Didi started to offer its services in Mexico back in 2018. First, the mobility service, the ride-hailing service. The first city where Didi launched in Mexico was Toluca. And now, 7 years later, Didi Rides is available in more than 70 cities. And some months after launching Didi Rides, then we also launched Didi Food, which is the food delivery service. And this is nowadays available in 60 cities across the country. And a more recent business line is also the one of financial services, where we have different services available. And in total, through these 3 business lines, Didi now offers over 20 solutions to the Mexican population. And all these different solutions are combined under one single app. And in that regard, we believe that Didi has been able to create a strong ecosystem through this super app, which makes it, which allows people to make everyday routines and tasks a little bit easier through the services that are offered through the application. So I think, it's been a good path for Didi in the country, and from one city back in 2018 to 70 cities in rides and 60 cities in food today.
Impressive. And how many people in Mexico roughly have used your app or have downloaded your app?
Yes, so what we have is that in the country we have over 30 million active users. That's across all these 3 business lines, and also includes the full ecosystem, right? Of course, we have, probably you're familiar with that, we have the end users, passengers, eaters who order our services. We have the people who ask for a loan or ask for a credit card, but then we also have many people who connect to the application to generate income, drivers, couriers, but also, of course, restaurants and shops. And so in total, this sum of 30 million users describes the whole ecosystem.
And how do you compare, I guess your main competitors are Uber and Rappi. How do you compare in size to those 2 in Mexico?
Yeah, I don't have exact information regarding regarding size, orders, etc. But of course, Didi in a certain way is special because we are the only digital platform in Mexico that combines these three main business lines in one single super app, right? We have mobility, we have food delivery, and we have financial services, which makes us in a way special, and which also makes us quite impactful in the Mexican society. And this was something that we have tried to understand a little bit more in detail through a report that we have commissioned to create a consultancy that specializes on measuring the economic and social impact of companies, organizations, projects. And what that report showed was that Didi contributes 118 billion Mexican pesos to the economy, which is equivalent to 0.47 percentage points of the country's GDP. So this is quite an impressive number for a single company, I think, and it shows the relevance of, on the one hand, the sector in general, of the sector of digital platforms, but also of Didi in particular, and how it helps to generate opportunities for the people to generate income, but also the impact it generates for all the users and for all the ecosystem.
Siegfried, if I'm not wrong, you started with the food delivery. No, you started with the right application, then the food, and then the financial. How big are each one in your overall business model?
Yes, so all business lines are relevant, right? Because what we see is that particularly as a super app and as taking advantage of that opportunity of combining these three business lines in one single app and offering multiple services to the different users. This is where we really generate synergies and add user value and make lives easier for everyone. Didi Rides, as I said, since it also started a bit earlier, is available in slightly more cities than Didi Food, but Didi Food is also very relevant and has been growing a lot. The financial service one is a more recent business line. It also, of course, it follows a different rhythm, but there we have also been able to offer different services. It started with the loan service and the Didi card services, and more recently we have the Didi Cuenta. We have launched Didi Cuenta, which is providing also quite a high interest rate to for the deposits, 15% interest rates. So it's difficult to say which one is bigger or which one is more important. But what I think is quite interesting is the way we can take advantage of having all these three services in one single app, right? Because maybe someone starts coming into the app as a passenger, and then they see, there's quite affordable and nice food options available very close to my place, or maybe not that close, but I can get it very conveniently through the app. So they try Didi Food, and maybe they are lacking a payment method to pay for these services, and they see that through the same app they can actually get a Didi card, which has no annual fees or something like that. And so taking advantage of this ecosystem and providing these additional services to people who might come to us for one specific need, but then find out that they can make their daily lives easier through the other services. I think this is something which is really cool.
Yeah, I'm a Didi user, and I've seen the three services. I get WhatsApps with Didi cards, and I think that differentiates you from your rivals. What else would you say makes a difference? Price? Or what else can you tell us about why would people pick you rather than your competitor?
I think what Didi has always prioritized is creating user value, making sure that we are able to offer those services that are important for the people in the country, that we're able to really understand the user's needs. And in that regard, I think what is also particular the case of Didi is that we have very strong local teams who are very embedded locally. And this has allowed us to keep innovating and keep bringing new services changes to the app which are really relevant for our users and which makes their lives easier. For example, one example is also we call it Pon tu precio, or in English it's Set Your Fare, which gives basically more control both to passengers as well as drivers about the fare of a trip. So it's a negotiation model where within a certain frame, drivers and passengers can negotiate the fare for a trip depending on the conditions of the trip, depending on location, day and time, etc. And this, I think, is something which has been attractive and which has been adopted very well. And it shows how I think Didi has been able to always find those new product changes or product innovations that really attend to the needs of the users.
In that sense, what else would you say Didi brings to the marketplace for the consumer that is more attractive?
I think another distinction probably is the importance of partnerships, both on the commercial side, but also on with regards to governments. Actually, one of Didi's value is win-win collaboration. So we always try to find ways how we can collaborate with governments. Another example or another product innovation, so to say, that we have is Didi Taxi, which, for example, has allowed us to also bring the app to a state like Oaxaca. And Didi Taxi, of course, also allows traditional taxi drivers to receive additional requests for rides, right? Many people travel to Oaxaca, many tourists go there, and many of them already have the application on the phone. So through these partnerships with the government, it has been able to launch Didi Taxi in Oaxaca and bring this value on the one hand to the people who travel there and can conveniently ask for a ride, and on the other hand also for the taxi drivers who receive additional requests with all the safety features, etc., that the application has, and can generate additional income. That's on the government side, the partnerships. But then there are also other very interesting partnerships that Didi has been working on, such as, for example, bringing OXXO into the application. So now through the application, you can order the snack or whatever you need in your daily life from an OXXO and get it delivered to your home. So I believe this is also another quite impressive distinction.
And could you tell us a little bit, what does it take you for opening up your services in a different city? Do you need already to have a certain number of drivers? How does that planning go through?
Sure, of course. I mean, once the company decides to offer the services in a new city, there is a set of different preparations going on. You need to do a regulatory assessment, of course, as well, because at least in the case of rights, it's regulated at the state level, right? So every state has a different regulation, and then all the different teams come together and prepare the plan. You have operations preparing everything. You have customer service. You have marketing. So all those different teams prepare the plan to launch a city, depending also on the particular conditions of each city. And once all teams are ready and have done their job, the app basically goes live and invites the different sides of the ecosystem, depending whether it's ride or food, to join the application. Then the services can be offered. And as you know, probably much better than I do, it's all about matching, right? Matching supply and demand, and finding efficient solutions for the market by bringing together the demand and the supply of a particular service.
Can you tell us a little bit, Siegfried, about the transition to electric vehicles? How's that going to affect your drivers that, for the most part, own their own vehicles or rent them from third parties? Is that going to be a huge challenge? And when do you think the transition to electric vehicles is going to be complete?
I think it's a big opportunity. It's a big opportunity for the drivers, for the country, for the platform. And just the other day, I was reading the Didi sustainability report, which is a report which is published by HQ. And this report has one number which surprised me quite a lot, and I think impressed me actually. And it's that in China, for example, Didi has already 5.1 million electric vehicles registered on the platform, right? So this, of course, means that Didi has a lot of learnings and a lot of knowledge when it comes to adding electric vehicles to the platform. And this is also what we are trying and what we are bringing to our international markets. On the one hand, Brazil, but on the other hand, also in Mexico. And it's a big priority for the company in Mexico for the next 5 years. And actually last year, Didi announced that our goal is to have 100,000 electric vehicles on the platform by 2030. So we initiated a big strategy to make it easier and more attractive for drivers to use electric vehicles through the digital platform. And this comes also on the one hand with a big investment, but also again with a lot of partnerships, right? Because the challenge of mobility transition or energy transition towards EVs, it's really an ecosystem challenge, right? It's not on a singular actor, but a whole set of different actors need to work together. You have, of course, you have the fleet partners who need to join the challenge. You have actors who focus on charging infrastructure. You have financing actors who need to participate. You have insurance players who need to participate. So, of course, you have you need the manufacturers and car makers who need to join this challenge and this objective. So, and that's what we announced last year. So, 100,000 EVs by 2030 with a joint 1 billion Mexican peso investment throughout this period. And you said your question, Damien, was a little bit about the drivers and how it's going to affect them. I think what's important to remember is that while, of course, the acquisition cost of an EV is still a significant cost, particularly if you are a high intensity or a very intense vehicle user, switching to an EV can provide very significant savings for the drivers, right? And we believe that those switching to an EV can provide drivings of 60% on the one hand on fuel, but on the other hand also on operational costs in general. And I think once drivers and also fleet partners really understand these savings, then also, of course, the interest increases a lot to switch, to make that transition and to use an EV and register an EV on the platform. And then, of course, a little bit later, once this ecosystem grows and once more EVs are being added to the platform, this, of course, then will also represent an important benefit for society and for the environment, right? Through that transition time from now till 2030, and once the EVs have been added step by step to the platform, these EVs will avoid emissions by 70% avoided greenhouse gas emissions through this transition to EVs instead of internal combustion engine vehicles. So I think that's a very good opportunity. Again, it's an ecosystem that needs to come together, but I think we're on a very good track.
Siegfried, before I go into the regulatory changes that Mexico is imposing on this type of new platforms, you're not considering entering financing the acquisition of these EV by your partners or the drivers? Is that something you're not planning to do?
So it focuses on that partnership approach, right? We try to work together with different partners from those different sectors who can offer those different services to the drivers. Financing is a relevant component, but I think it's going to be through partners, not directly through Didi.
And now moving to that question about the regulations. Mexico has changed its labor laws. Your drivers are now incorporated if they reach a minimum wage income for a month into the social system, the social welfare of the country. How is that impacting you, your costs, and are there any of those costs being translated to higher fees for your services? And I understand that you're now the biggest employer in the country with incorporating so many drivers to the IMSS platform.
Yes, so the Mexican government published a reform on December last year, which provides certain requirements and regarding digital platforms. And what's important to know is that right now we are in a pilot period, right? The reform includes a 6-month pilot period, which started in July. So right now we are at the end of the second month of this 6-month pilot period. And as you mentioned, one part is that the platforms need to register their drivers and couriers with the social security system, so that all of them can have labor risk insurance through IMSS, through the social security system. And in that regard, Didi has registered 700,000 drivers and couriers with IMSS at the beginning of the pilot period. And overall, I think the numbers that the government has presented, I think earlier this month, at the beginning of this month in a morning press conference, these numbers show a little bit the impact and the scale of that industry. And they show how many drivers and couriers connect to either Didi or other platforms in order to generate income. And this, I think, again, is an important and impressive reminder about the relevance of Didi in the country. Now, it's still too early to really tell about the costs and the impact of the reform. We're still in the pilot period. We are, of course, the platforms are adjusting. Didi is adjusting to that reform and complying with it, registering all the drivers and couriers. But at this stage, it's too early to tell how it's affecting the different parts of the company.
I assume that it does generate additional costs, but you will have to assess how much they are as the pilot continues to be tested. Anything you can tell us of what might be the repercussions? I know that the drivers, some of them were even skeptical about joining. As far as I've talked to a few of them. Some of them probably are very happy now that they have this greater backing of Social Security. What can you tell us what you've learned so far? I know it's still in the early stages.
Yes, I think all of the participants, the platforms, but also the drivers and couriers, we are in this adaptation phase right now, trying to understand what this reform means in the day-to-day. What we know is that drivers and couriers have always valued a lot and continue to value the flexibility, independence, and choice that the sector brings, right? And this relates to the decision or the question of when to connect to a platform, which day, and what time of the day, for how long, and even the question of which platform to choose and which platform they want to connect to. So this flexibility and independence has always been and continues to be very important for drivers and couriers, and therefore it was also very important for us to keep and to protect these characteristics. And I think right now we continue to see that drivers and couriers can continue to choose when to connect, for how long to connect, etc. And that's definitely a good thing. And I think after that pilot period, we will have a much more in-depth understanding of how this reform works, how this reform impacts the lives of the drivers and the couriers, as well as the operation of the platform.
Any other countries that you are planning to go for?
No, at this stage there are no expansion plans to announce. Didi operates in several countries internationally, 10 countries in Latin America, but also Egypt, Australia, New Zealand, Japan. And our focus right now is to continue innovating in these countries and adding value there for our users.
Siegfried, how relevant is Mexico?
Mexico is a very relevant market for Didi, and I think if you look at the country and if you look at certain variables of that country, it's a little bit easier to understand why Mexico is so relevant. Right? Of course, you can look at size, you can look at the number of population, but then when it comes to the particular services of Didi, you can also look at other variables, like for example, internet coverage, like for example, the percentage of household spending on transportation. There, Mexico ranks quite high compared to other countries in the region. You can look at also the safety perception in with other transportation modes. For example, in public transport, there sometimes the safety perception in Mexico compared to other countries isn't too high. And you can also look, for example, at the average vehicle ownership per inhabitant. There you have also quite a good number compared to other countries. And if you combine these different variables, it's a little bit easier to understand why Mexico is such an important market where we believe Didi can add a lot of user value. Of course, also the percentage of population living in urban areas, right? Our services focuses on urban areas and on very densely populated areas. And so these are some, I think, interesting variables that one can look at and compare also with other countries to better understand why Mexico is so important. But on the other hand, what we also see in Mexico is that there is a lot of openness to try new products. So actually, in the case of Didi, many products, we try them out first in Mexico before we then also bring them to other places. For example, one service that we first launched and tested in Mexico is Didi Entrega. It's a little bit of a mix between mobility and food delivery, but it's basically the possibility to send an object from A to B, which is not only a service which private people use P2P to send objects, but also small businesses use it to deliver their things in a city, flower shops or other small businesses. And this product was first tested in Mexico. So that's also another reason why Mexico is so important for the company.
Fascinating, Siegfried. I mean, we could talk about this for many hours, but time has done its trick again. We've run out of it, but we want to thank you, and we hope we can have you again when the pilot program ends. So if you want to share some of the conclusions you've seen with this very interesting reform that Mexico has implemented and you guys have began to adapt, I think it's fascinating from very different points of view. So hopefully we can have you back.
Many thanks for having me, Eduardo and Damien. It was a great conversation, and I'm looking forward to staying in touch.
Thank you.
So thank you for joining Mex Moves. As I mentioned at the beginning, please give us 5 stars if you think it's merited, and hope you listen in next week.
Thank you everyone for listening. We'll be back next week, and follow Damien's advice. Always very wise.